Are you on the hunt for the perfect ETF to supercharge your investment portfolio? Torn between the tech-driven Nasdaq 100 and the diversified powerhouse that is the S&P 500? Well, you're in the right place. Let's dive deep into these two popular ETFs, comparing their past performances, risk profiles, and potential future returns. Stick around to discover which one could be the best fit for your financial goals. If that sounds good to you, make sure to hit that subscribe button and turn on notifications so you don't miss out on any future content as well. Today, we're pitting two heavyweights of the ETF world against each other. The Nasdaq 100 versus the S&P 500. Both have their own unique strengths, but which one deserves a spot in your portfolio? Let's find out. First up, the Nasdaq 100. This ETF is a tech titan, home to 100 of the largest non-financial companies listed on the Nasdaq Stock Exchange. Companies like Apple, Microsoft, Amazon, and Google's parent company, Alphabet, dominate this index. In fact, technology stocks make up over 50% of the Nasdaq 100, which is why it's often seen as a proxy for the tech sector as a whole. Historically, the Nasdaq 100 has delivered impressive returns, especially in the last decade, where we've seen a massive surge in tech stocks. But with great power comes great responsibility. This ETF can be highly volatile. During market downturns, it's not uncommon to see sharp declines, but during bull markets, the gains can be extraordinary. So, if you believe in the future of technology and are willing to take on some risk, the Nasdaq 100 could be a lucrative option. Now, let's turn our attention to the S&P 500. This ETF is often referred to as a benchmark for the entire U.S. stock market, and for good reason. It includes 500 of the largest publicly traded companies across a broad range of sectors: technology, healthcare, finance, consumer goods, and more. This diversification makes the S&P 500 a more balanced option, spreading risk across multiple industries rather than concentrating it in just one. Over the long term, the S&P 500 has provided steady, reliable returns. It might not soar as high as the Nasdaq 100 during bull markets, but it also tends to be less volatile during downturns. This makes it an attractive option for investors who want broad exposure to the U.S. economy with a more moderate risk profile. Let's take a closer look at how these ETFs have performed over time. Over the last decade, the Nasdaq 100 has outperformed the S&P 500 by a significant margin, thanks largely to the tech boom. But it's not just about recent history. When we zoom out and look at 20 or 30-year timelines, we see that the S&P 500 has offered more stable growth, weathering market crashes and corrections with less dramatic losses. Another important factor to consider is volatility. The Nasdaq 100, with its tech-heavy portfolio, tends to be more volatile, meaning it can experience larger swings in value, both up and down. The S&P 500, by contrast, benefits from its diversification across different sectors, which helps smooth out the bumps in the road. This is why many investors view the S&P 500 as a core holding in their portfolios, providing a solid foundation on which to build. So, how do you decide which ETF is right for you? It really comes down to your personal investment strategy. If you're someone with a higher risk tolerance and a long investment horizon, say 10 years or more, the Nasdaq 100 might be more aligned with your goals. The potential for high returns is there, especially if you believe tech will continue to drive economic growth. On the other hand, if you're looking for stability and a steady growth rate, the S&P 500 is a tried-and-true option. It's especially suitable for investors who prefer a more conservative approach or those who are closer to retirement and want to protect their capital while still enjoying some market exposure. Remember, you don't have to choose just one. Many investors opt to include both the Nasdaq 100 and the S&P 500 in their portfolios, using them to balance each other out. For example, you could allocate a portion of your portfolio to the Nasdaq 100 for growth and another portion to the S&P 500 for stability. This way, you can capture the upside potential of tech stocks while mitigating some of the risks with a diversified approach. In the end, there's no one-size-fits-all answer. The best ETF for you depends on your unique financial situation, investment goals, and risk tolerance. Whether you choose the Nasdaq 100, the S&P 500, or a combination of both, the key is to stay informed and make decisions that align with your long-term strategy. And remember, investing is a marathon, not a sprint. Stay patient, stay focused, and keep learning. If you found this video helpful, please give it a thumbs up and share it with someone who might also benefit from it. And of course, subscribe for more insights and strategies to help you achieve your financial goals. Thanks for tuning in. If you're interested in more investment tips, check out these other videos on our channel. And don't forget to follow us on YouTube for daily updates and insights.